Hi, welcome to today's tax update, brought to you from Baker Street Station, one of the oldest underground stations in London, built in 1863. In today's webcast, we will cover tax developments for December 2019 and January 2020. So let's move inside and start the webcast.
Let's start our webcast with a closer look at local developments. In early December, a number of amending laws were published in the Official Gazette, which extend the tax-free loan restructuring provisions until the 31st of December 2020. The exemption applies to the following taxes: the income tax, the special defense contribution, the capital gains tax, the stamp duty, the VAT, the land and service department fees, as well as the collection of taxes law. An amending income tax law was also published in the Official Gazette in December, providing for an increase in the personal allowance available for contributions to the Social Insurance Fund, approved pension and provident funds, the general healthcare system, life and medical insurance policies, as well as other approved funds. More specifically, the limit of the deductible allowance is increased from 1/6 to 1/5 of an individual's taxable income before such allowances, and is applicable from the tax year 2019 onwards. On the same day, an amendment to the Special Defense Contribution Law was also published in the Gazette. The amendment provides that the deemed dividend distribution provisions do not apply to accounting profits resulting from the write-off of loans, either in full or in part, that were non-performing loans on or before 31 December 2015. This provision is applicable for the tax years 2017 to 2020. A further amendment introduced in the income tax law relates to the resolution of double taxation disputes. A double taxation dispute is one in which two or more countries claim the right to tax the same income or profits of a company or individual due to conflicting national interpretation of double taxation agreements. This amendment was driven by the EU Tax Dispute Resolution Directive, which came into force on 1 July 2019 and aims to provide a streamlined process to resolve such disputes within the European Union. Regulations with regards to this were published in the Official Gazette in December 2019 with effect from 1 July 2019. Lastly, on the local developments, a tax bill has been recently approved by the Council of Ministers, which extends the scheme for investment in innovative businesses. The incentives were initially available until 31 of December 2019 and will now be extended until 30th of June 2021. As a reminder, this scheme provides that individual investors funding a small or medium-sized innovative business can deduct the cost of the investment from their taxable income, subject to certain limitations. Let's now look at some tax treaty developments. On 30th of December 2019, the Cyprus-Kazakhstan Income Tax Treaty was ratified by Kazakhstan. The respective treaty was already ratified by Cyprus and therefore has entered into force on 17 January 2020. Although there are a number of open discussions with a number of potential treaty partners, Cyprus is currently in active negotiations with Poland and France for the signing of a revised tax treaty for the avoidance of double taxation, and with Sri Lanka for the signing of a new tax treaty. Watch this space for further developments. Moving on to international developments, on the 22nd of January, the Multilateral Convention, along with its instrument of ratification, were published in the Official Gazette and have already been deposited with the OECD on the 23rd of January. As such, the MLI will come into effect on the first day of the month that follows the third month following the deposit. That is, on the 1st of May 2020. As a reminder, the MLI is designed to implement tax treaty related measures arising from the BEPS project through the automatic modification of existing bilateral tax treaties. We will close off today's tax update with a brief reminder of the upcoming deadlines. Today, 31st of January, is the deadline for the submission of the deemed dividend distribution declarations for the tax year 2017. It is also the deadline for the payment of the second installment of the 2019 provisional tax without incurring any interest, and finally, for the 28th of February, this is a deadline for submitting objections on assessments issued in December 2019. As a reminder, although the normal deadline for submitting an objection on an assessment is the end of the month following the month in which it was issued, for December, the law allows an additional month for submitting an objection. Lastly, we would like to inform you that in early January, Deloitte published its 2020 tax facts. It is available in Greek and English, and the Russian version is expected soon. As you know, our tax guide has proven to be a useful tool for businesses and individuals who wish to have complete and updated information on the Cyprus tax system. The electronic version can be found on the Deloitte Cyprus website. This concludes our tax update for this month. Thank you for watching.